Hey guys, Dave Keller here with Market Misbehavior. I'm often asked about multiple time frames and how to relate charts when you're looking at different time frames. What happens if the weekly chart tells you one thing, the daily chart tells you something else, and how do you reconcile that? Even worse than that, sometimes I actually have people that don't pay attention to multiple time frames. They actually just look at their one time frame. They look at a daily chart or an hourly chart and they think that that's happening in a vacuum. They forget to relate what they're seeing, the time frame they're looking at, to all the other time frames that are at play. So here, we're going to look at multiple time frame analysis, particularly with Bitcoin, timely example, something that's having a bit of a struggle, pulling back in the recent months. But we're going to look at it on 3 different time frames and talk about how they relate. So today, it's all about multiple time frames. So I'm often asked about how to reconcile when 2 different time frames disagree. So for example, the weekly chart looks constructive, the daily chart looks a little negative, or the daily chart looks very positive, the hourly chart is starting to look weak. And what do you do with that, right? How do you actually invest around that scenario when you have disagreement between the different time frames? Well, there are a lot of times when multiple time frames will all agree, when the weekly, daily, hourly, monthly, 5-minute, everything in between charts are all in alignment. If you think of a stock that's in a pretty consistent uptrend, you get a sense of how that could probably happen. Or even Bitcoin, if you look back in maybe 2017, right, at the end of that year, you could make the case that all of those time frames overall were very constructive. But to be honest with you, that rarely happens. There's usually some disagreement on there. So before we get to these charts of multiple time frames, particularly with Bitcoin, we'll talk about what the charts are saying now. I just want to remind you, if you're interested in this sort of thinking about investor decision-making, behavior, behavioral finance, chart analysis, technical analysis, all of the above, please subscribe to my channel. It'll be awesome to have you along the ride with us. Also, if you appreciate the video, give it a thumbs up. We'd very much appreciate that back. Finally, put a comment below the video. What do you see looking forward for Bitcoin over the next month or so based on what we're talking about on these 3 different time frames? Put a comment below the video and let me know. Now let's get to the charts. All right, so as I mentioned in the introduction, when we talk about multiple time frames, I would first off say that one of the classic mistakes people can make is not paying attention to multiple time frames. It's incredibly important to understand that whatever time frame you're looking at, if you're trying to trade for the next 6 minutes or invest for the next 6 months, you have to remember that that time horizon is also related to other time horizons. There are larger time horizons, the much longer term trend that is part of the picture, right? That is affecting what's happening on your time frame. Also, there's a shorter term time frame that's also the flickering ticks, the short term movements that may impact your time frame as well. A lot of times we get the blinders on and we focus on one particular chart or one particular time frame, and as a result, a lot of times we can get caught off guard by themes that are playing out from other time frames that we just may not be familiar with. So as a thorough technical approach, you really want to address something on multiple time frames. So, the base case for me, thinking usually about 3 to 6 months down the road, means I'm often looking at weekly and daily charts to make a proper assessment. The weekly chart going back about 5 to 7 years, the daily chart looking back usually around 2 years to make sense of that longer term time frame and the medium term time frame for me. There's also shorter term time frames as well, but those are the main ones that I pay attention to. So what we're going to do today is use Bitcoin as an example. We're going to look at 3 different charts. One is a weekly chart going back really to the inception of Bitcoin back to 2014. Chart number 2 is a daily chart looking at the last year or so to understand the shorter term price movements there. Then finally, we're going to look at an hourly chart looking at the last month and a half of trading, just to try to get a sense of how that short-term time frame relates to the other 2. So we're going to start with the weekly chart here. And again, if you're looking at a stock or an index that's been around for many years, you can go back 10, 20 years if you'd really want to. Today, we're looking back around 7 years, going back to mid-2014. Now, if you know your history of Bitcoin, you can think of it in a couple different phases, right? The first phase was sort of this initial introduction phase. This is when Bitcoin was trading couple hundred at a time, a couple hundred dollars per Bitcoin, ridiculously low relative to current levels, of course. But then there was this exponential rise, right? When Bitcoin really accelerated in 2016, 2017 to hit a peak around 20,000 in late 2017. And what's interesting is look at the exponential rise that you see in Bitcoin at that point. The first main point I will tell you is look at how long it took for Bitcoin to reclaim that high around 20,000, right? We first did it at the end of 2017. You had to wait through 2018, 2019. Finally, 3 years later, at the end of 2020, we finally eclipsed that level. One of my favorite charts from the Fidelity chart room I used to spend a lot of time on was a long-term history of the US equity market, looking at the Dow Jones Industrial Average. And when the Dow hit 1,000 in the late 1960s, it was about shoulder level for the average person. And as you walked along this huge chart that took up the entire wall, you saw how long it took. About 16 years, 17 years, I want to say, till the 83 breakout. After the 82 low, 83 breakout, the Dow finally broke above 1,000 for good and sort of continued its trajectory to the 80s and 90s into the tech bubble in 2000. But overall, you think about how long it took after the Dow rallied in the go-go years of the 1960s, how much it was how long it was really a sideways trend. Similar thing with Bitcoin, right? We forget with this, with the volatility, with the acceleration to the upside as Bitcoin went up into the 60,000s, how long it took once it first made that initial significant peak there in late 2017. It took 3 full years to reclaim that. So one lesson I think from the weekly chart, looking a little long term, is remembering that it can be many months, many weeks once a high is hit before we reclaim them. So when people talk about how we are most likely going to go back and retest the highs in the 60,000s, I don't think that's unreasonable. I think it could happen, but I don't think there's any reason why that needs to happen anytime soon. And if you look back at the limited history of Bitcoin, you can see that after that initial push into the high in the end of 2017, it took 3 years to actually reclaim those levels. The second thing I would observe on the weekly chart is look at the drawdowns, right? And you know that if you followed Bitcoin as an asset class, you follow cryptocurrencies, there's a lot of volatility. And while this chart looks incredibly orderly, going from lower left to upper right, you have to remember some of the drawdowns in here are catastrophic. So it lost 85% of its value from the end of 2017 to the end of 2018. A secondary pullback here, a secondary drawdown in 2019 to the first quarter of 2020 was about a 72% drop. And the reason why I'm highlighting that is if we would have a similar drop, the minimum of these last two major drawdowns in the history of Bitcoin, you can see that going from the low 60s, about 72% down, would take us around 18,000, 18,500 on Bitcoin, which is obviously a significant drop further from where we have. We've already halved the value of Bitcoin. It could, not halve again, but close to that to reach just a minimum drawdown that we've had in the significant drawdowns that we've had in the past. The final thing I would point out on the weekly chart is the similarities on 3 periods here. If we look at the 2017 peak, we had become extremely overbought with an RSI above 80, and then the RSI had dropped below 50. And that happened here, that first initial push down in 2018, and then eventually obviously losing about 85% of the value when all was said and done. We had a similar pattern in the end of, middle of 2019, became overbought, came down an RSI below 50. That was here, the initial leg down in the third quarter of 2019 before eventually finishing down around 72%. We've had a similar type of configuration where it was overbought, then came an RSI back below 50, which is where we're at right now. So again, there's some similarities to some of the previous significant tops. And if we would bottom out right about here, that would be certainly the most shallow pullback that we've had since the peak in 2017. So it's worth putting the current pullback that we've seen into proper context. Look at some of the previous drawdowns and looking at the weekly chart, looking at the long-term history of an asset, not just on Bitcoin, but on anything, can help you put the current movements into proper perspective. It's very easy to get caught up in what I call the short-term, the flickering ticks, right? The short-term fluctuations, the volatility. Look at the longer-term chart, especially on something like this, a relatively new asset class, to see how things have actually played out before, what previous drawdowns have looked like, and what the conditions have appeared. So at this point, I'm seeing us trade below the 40-week moving average, which is right around the 200-day moving average. That's the first time we've been below there since the second quarter, it looks like, of 2020. And overall, I'm seeing a lot of conditions similar to previous topping patterns. If we would have just the minimum of the drawdowns that we've had after these previous overbought conditions as we're seeing now, that would put a downside objective to Bitcoin below 20,000. That's not saying we're necessarily going to get there, but that would tell you what the previous pullbacks have been, which means if we would bottom out around here, around 30,000 or so, which were the lows for most of 2021, this would be by far the most shallow pullback we've seen in the history of Bitcoin. Now let's go to the daily chart of Bitcoin. There are a lot of lines on here, and I apologize for that. These lines are left over from a previous video I did on this channel talking about applying Fibonacci retracements to Bitcoin. So if you're interested in what all of these horizontal lines are referring to, go back to that previous video and check it out. It'll help you understand how we look at Fibonacci retracements and line up significant highs and lows. But when I'm looking at the chart of Bitcoin, the daily chart, looking for the last year, here are some of the themes that I'm seeing. Number one, a clear rotation from accumulation phase to distribution phase. And I sort of describe charts in one of two phases. You're either in accumulation phase, where you see a pattern of higher highs and higher lows, or you're in a distribution phase where you see lower highs and lower lows. And most charts can be classified as either in accumulation or distribution phase. To be honest with you, some charts really go in a sideways range. I would call that a digestion phase or a consolidation phase, which would be the third type. But usually you can classify things as one or the other. See which either bulls or bears sort of are in control of the chart. So which of the two are in control now? Arguably, and I think pretty clearly looking at the trends in the charts, the bears have been in control, right? You've seen a reversal from accumulation going into the high in mid-April when Bitcoin got to the mid-60,000s. We then rotate lower. We undercut the previous swing low. The reaction rally from there undercut the previous high. So now you've reversed from a pattern of higher highs and higher lows to a pattern of lower highs and lower lows. This is a classic downtrend. What's happened now is arguably we're in that third phase, that digestion phase, where we're really range bound between 30,000 on the lower end, around 42,000 on the upper end. That range was really established back here. The first pullback in 2021, we had a couple pullbacks after the initial rise after the new year, and you pull back right to around 30,000 three different times within about a month. We then rallied and pushed to a couple legs higher. Then when we came back and had that significant drawdown in May, we pulled right back to the 30,000 level, same level. We've now bounced off of that a couple more times. Now, as we've seen further distribution, we're again retesting that level. I think so many are focusing on that, and reasonably so, as a line in the sand. What concerns me about this daily chart is if we would break below 30,000, if there's any indication that there's additional selling pressure, there's a lack of buying power, and to the point that the price is finally going below 30,000, I think you could see an acceleration to the downside. A lot of times when there's a significant, well-established support level, and then we break below that, there can be a flood to the exits as people realize support is not holding. People that bought in at these lows previously and some of these other dips are now underwater along with everyone else that bought up here. And all of a sudden it feels less and less attractive. People start covering those positions and exiting losing positions. That continues to put selling pressure, and that's why downtrends can accelerate. So support is absolutely expected around 30,000 until it's not. And when it's not, then I would be concerned about further downside from there. The challenge from a technical perspective is that there's really nothing left there. You have a Fibonacci level here, which is taking one of the previous ranges. I think that's the low at 10,000 up to the high in April. That would put us around 27,200. And that's really the last clear support level you have before getting back down to previous significant lows around 10,000. We're not talking about the monthly chart. I'm looking at, or the weekly chart, and some of those some of the pullback levels there based on the historical drawdowns, but that's where this we may want to refer back to that. The other thing that comes to mind on the daily chart is just the momentum, the negative momentum trend. If you start the clock in January of 2021, look how every push higher, even when it was making new highs, and then when it was more in a distribution phase, look how literally every single high is met by a lower momentum reading, right? The RSI fails to eclipse the previous high. Every time the price tries to swing higher, there's less and less upside momentum. And so really, Bitcoin has changed from being in a bullish phase with the RSI becoming overbought on upswings and remaining above 40 on any pullbacks. It's now more in a bearish phase where it's becoming oversold on pullbacks, and it's not getting above 60 when there's a rally. So it's really rotated from a bullish phase to a bearish phase. The momentum has been negative over the course of the year so far. And the concern I have with that on a daily chart is that trend certainly seems to be more negative than positive. There's not a lot of evidence that there's bottoming happening. Besides, the only positive sign I would argue is that it's not going down anymore, but that's not usually a great reason to buy something, the fact that it's not going down. You want to look for some signs of accumulation. I would argue we're not really seeing that yet. So at the very worst, this is in a distribution phase. At the very best, I would say it's in a consolidation phase. Either way, 30,000 is key. And I would say if we would get above these swing highs in sort of the 42,000 range and get above there, that would indicate a full reversal, indicate more of a constructive pattern, more of an accumulation phase. A higher low would be really important along the way too. And if it would do that, it would also break this negative momentum pattern that we've seen so far year to date. So while the weekly chart overall is showing distribution and showing the current move in relationship to previous drawdowns, I think the daily chart really drives home the rotation from accumulation phase to distribution phase. It really highlights the negative momentum trajectory that we've seen so far year to date and the importance of the 30,000 level. Now we get to what I call the short term, which is an hourly chart. In my own work, I really don't go below that time frame. If you're trading in the short term, you may go 5 minute, 1 minute, and even shorter. And that's not something I usually operate on. I tend to think a little more longer term than that. But I will look at the hourly chart, especially things like cryptocurrencies that are trading 24/7 and have a lot of volatility, a lot of short-term movements. The hourly chart a lot of times can be helpful to make sense of the environment that we're in. When I'm looking at the hourly chart for the last 30 days, I think I'm at, last month, right? So it's about 30 days of trading here. So I drew two different trend lines here. The first one is connecting, I think maybe a better fit to the data. I lined that up with a couple more points in here, and I just assumed that this was sort of a blow off above that trend line resistance. The other one I think is a little more valid is taking the peak from the end of June, the peak from the first week in July, and then the peak with which we hit a couple days ago, and then connecting those. And I'm keeping an eye on both of these, but I think that purple trend line is probably a more valid representation of this downtrend. So because we've been in a relative downtrend, we're making lower highs, and the lows overall have been getting lower. Right now, it's interesting to see if we continue that pattern and make a new swing low there. But overall, on a rally on the hourly chart, I'd be looking to see if we can break above this purple trend line resistance. Overall, I would say the weekly chart is negative. The daily chart to me is more negative and showing a distribution. This hourly chart is representing sort of the recent downtrend, sort of the tactical downtrend, and the first indication that Bitcoin is no longer going down. Some signs of accumulation will be this rotating above trendline resistance. So in this case, I think the early warning system could be from the shorter time frame, which is often the case. You'll see a bounce on the shorter term time frame. Getting above the most recent swing high would be important there. Then we look to the daily chart to see if we're able to put in a higher low, start to improve the characteristics of that chart. And then eventually the weekly chart would probably recognize that the trend is going higher. So the idea here is we now have the weekly chart with the long-term trend, the daily chart with sort of the medium-term trend, the hourly chart here with more of the short-term trend, and a clear line in the sand. If there was one chart I would have up following Bitcoin minute to minute, day to day over the next week or so, this is the chart I would look at, the hourly chart, to see if we're able to reverse this downtrend and break above highs. And it's important to think about how this short-term time frame relates to the other two that we've looked at. If we would break above the purple trend line resistance, I would then go to the daily chart and elsewhere to see how that lines up with previous price swings, and when start to make an assessment of when the chart begins to look a little more constructive overall. So that's it. That's the breakdown of Bitcoin, and really focusing on the message of multiple time frame analysis. Again, I often find that people put the blinders on. They look at one particular chart and they make their call based on that one chart. And again, in general, what you want to remember is that the chart you should use as your primary timing tool should be one that's in line with your time frame. So if you're trying to day trade Bitcoin, which I would most likely not recommend for most people, but if that's what you really want to do, you want to be looking at short-term data, right? Because that's where you're trying to actually win the game. If you're a long-term investor, make sure you orient yourself on the long-term trends, the trends where you're trying to actually operate, but then look at how the short-term actually relates to that long-term trend. And because a lot of times the short-term charts, the hourly charts, or even less, will give you an early warning that things are starting to reverse, that there may be an inflection point, and then you look at the daily chart and others to sort of confirm that. I hope you found this discussion of multiple time frames of interest. If you appreciate this channel, what we're trying to do to spread the word about technical analysis, behavioral finance, investor psychology, sentiment, breadth, momentum, all of the above and more, give us a subscribe if you would. We'd love to have you along this journey with us. Also, if you like this video, give us a like, give us a thumbs up. We'd very much appreciate that right back. Finally, put a comment below the video. What do you see with the charts of Bitcoin? We talk about the weekly, daily, and hourly charts. What's your take on Bitcoin over the next month or so? What do you see in store? From all of us here at Market Misbehavior, I'm Dave Keller. Be well, be safe. We'll talk to you again soon.